Good morning, everyone. I'm Evan Lazarus with T3Live.com.
And I'm Jill Mallon Jr. from The Street, and together we bring you the morning call from T3's trading floor. Evan, we're kicking off this session down about 10 handles in front of initial jobless claims, and tomorrow we have JP Morgan and Wells Fargo reporting. So what are we taking a look at with the SPX this morning?
Well, when we talk about the market, we have to talk about the trend. And the trend right now is sideways. You know, in a sideways market, you have to respect that breakouts are going to fail. Breakdowns may fail. It is a very difficult trading environment for those seeking, you know, a trending type of trade. So let's take a look here at the S&Ps and what I mean by that. We can see here that in the S&Ps, we have this structure building, and this structure's been building for, you know, a couple of weeks, for the better part of June, even into July. You have this very corrective, choppy type of action. We have a lot of ebb, a lot of flow. You can see a lot of pops and drops. And this is the type of market that can be very, very frustrating for many type of traders. So you have to respect that right now the path of least resistance, as we've been saying for many, many weeks, is to short-term trade. Day trade, 1 to 2 day positions at max until something changes. When something changes, the market's going to let us
Well, I thought you brought up a great point yesterday on Twitter when you were saying that sideways is actually a trend, like you were just saying before. It doesn't have to be just up or down, and that there are some opportunities in here. So going into trade today, we're down about 10 handles. What are you looking to do? Are you looking just to stay within that range, or are you guys going to continue to ride the momentum down or position maybe for a long call into here?
Well, I think with the market down about 10 handles this morning, I think the mentality among shorter term traders is to look for what we call the fade. And the fade is basically to look for an area to buy this gap down. The S&Ps, you know, have been holding this 1335 area. So this morning presents a little bit of a more unique situation because we're down right now pre-market around 1325. So we're below support. So I think initially what's going to have to happen is buyers are going to have to step right in and take this market back above if this area wants to hold. If we can't really hold and we don't see buyers step in the first 30 minutes, the opportunity for lower becomes a lot more prevalent. So the first 30 to 45 minutes of the session today becomes a lot more of a, you know, a significant time zone.
Okay, moving along to the sector spotlight, we're going to focus on retail, which has been a real mixed bag as of late. Luxury names having a really tough time, but one name that has been a relative outperformer has been Target. I know you guys had an options position on here, closed out, I believe it was on Tuesday, with just over 100% gain. And that was a bullish position, right, if I remember correctly? Right, you guys had a vertical call spread on. Do you see any more upside momentum here, or are you looking to take a little bit off the table?
You got to take some off the table. Like I said, in a tougher market like this, where you have a lot of ebb and flow, the stronger names, and Target's been a strong name. We can take a look here at the daily chart. Even the last couple of days, Walmart and Target really outperforming new highs here. But going back, we have to be cognizant of the fact that we do have some prior resistance up in this area, which is just a stone's throw above. So I'd be looking to take profits into strength. In this market, you have to take your profits, especially when they're there on the long side. You have to take them. So I would lighten up the position here, and I would wait for some sort of digestion, some consolidation, some sort of basing action before we look back to see if we can't reposition ourselves.
Now, moving along to Walmart, this is a name that you typically wouldn't think of as a momentum trader, but it's really had an interesting slow grind up here, almost like a Microsoft, if you will.
Amazing. I mean, really, truly amazing. I haven't traded Walmart in probably 10 years, and now it's sort of on my radar every day for trades. And that's the funny thing about markets. They are very cyclical, and names you forget about as far as trades, whereas Walmart's been sort of a stalwart, hasn't really been worth watching. There hasn't been a lot of opportunity. Now it's opportunity, you know, abundant. And this is the chart of Walmart. You can see this breakout from the middle of May, taking the stock from, you know, the mid 50s all the way to here to, you know, 72. New closing highs yesterday. I would be very careful about being a buyer up here. You can see, you know, markets starting to stall out. We've had a huge run. You don't want to look to chase price. You don't chase price in this market.
Right, now moving along to Lulu, this was another one that was a relative outperformer in the first half of the year, but it's really broken down from here. Think it has some more to go?
Well, you know, now we look at the other side of the coin in retail. You have, you know, the Walmarts and the Targets that look great, and then, you know, the other side, sort of the more boutique names like a Lulu, you know, an apparel company starting to break down. You know, we have an earnings gap here that we just took out yesterday, so, you know, you can see volume starting to come up. So this one doesn't look that good, doesn't look that healthy, and we could see lower prices, possibly back to the lower 50s. You know, before maybe there's a counter trend trade in there. So right now I'd probably stay away from Lulu.
Moving along to JCPenney, speaking of a broken down stock, this one's been down over 20% in just 10 days alone. Fundamentally and technically, I really don't see any short-term catalysts here. What are the charts telling us?
Charts are telling us to stay away.
Right.
It's in a significant downtrend. There are going to be short-term pops here. There are going to be some oversold bounces as we've seen along the way, but every time we have an oversold bounce, we seem to then make new lows shortly thereafter. So I would stay away from trying to bottom pick some of these names until maybe after earnings, or there's a catalyst that maybe sparks some sort of short squeeze or short covering, or something that we can define as a tradable event. And right now it's just not there.
All right, moving along to Macy's, one of the other department stores which has been performing a lot better than JCPenney. Investors here, they're liking the cash-rich balance sheet, and they also have a pretty healthy dividend policy as well.
Macy's, another one, was a great performer a few months back, starting to become a more definable downtrend. You can see a series of lower lows and lower highs over the last 2.5, 3 months. Yesterday, big breakdown again. Every short-term bounce has been sold. Even again, over the last couple of weeks, we saw a little bit of consolidation, a little bit of a bounce. Yesterday, right back down, eliminating that entire consolidation. That's not a sign of strength. There's an outflow of capital here happening, and we could see back down into prior support around the low 30s. So still possibly lower prices in the cards here for Macy's.
Okay, let's move into the trenches and talk about the industrial group. In a highly correlative market, these names have really been trading in tandem. Industrials and financials, they were really good the first 6 months of the year, and they've taken a big hit going into third and fourth quarter, because I think everyone's starting to see that the emperor really has no clothes on, and that we really do have true global macro concerns, and it's starting to affect growth and the bottom lines here. CMI, Cummins, it came out on Tuesday, raising their dividend but taking down guidance. I personally think from a fundamental perspective, this might be a good opportunity to buy. Healthy balance sheet, executing well, really cheap relative to peer, and I think it's the best house on a bad block. But from a short-term perspective, are you guys looking to continue this momentum down, or is there an opportunity here on the charts?
Well, before we talk about Cummins, let's take a look at the XLI, which is the ETF for industrials, as that's really sort of the best way to play the sector overall. To me, as a technician, I have to be very, very cognizant of what's happening here. We have a little bit of a rounded top pattern into a bear flag here. This is this little consolidation area that we've been in here for the last couple of weeks speaks to me that this industry potentially is headed, setting up for another surge down. So I'd be very, very careful about being a buyer here. And as we look at some of the names, like a CMI, you're starting to see that selling happen in mass. And while these stocks are maybe short-term overdone here, and they could be setting up for a little bit of a micro, shorter term oversold bounce. To me, there's not a lot of, I don't see signs of health here.
Right.
And we'll look at some other names too.
Right, like Navistar, for example, which one I think fundamentally is one of the worst ones out there. They're having a ton of compliance problems. They're losing market share to names like a Packard, for example, in Class 8 heavy trucks. So I think this one, it becomes a question of, do you buy something because it's cheap? That doesn't always necessarily mean there's a unique opportunity there. So I think this one, almost like a JCPenney, you can't fight that momentum.
That's a tough trade.
Right.
Buying something because it's cheap. When does cheap become more cheap? When does more cheap become more cheap? So, the industrials are a huge part of the market and are very heavily watched. And if the industrials start to break down, you could see it have that systemic effect into other sectors. So I'd be very careful about being a buyer here. I'd wait for good bases to buy from. I'd wait for some sort of, let the bleeding sort of stop. And the bleeding to me, it hasn't quite stopped. It's still prevalent. There's still a little bit of you can see a little bit of panic in some of these trades. Let's go back to that CMI, right? There's a little bit of panic here. There is a rush to the exit, big volume, massive selling. This is not the kind of thing you want to step in and just try and bottom pick, unless you're really just day trading or you have 1 to 2 to 3 day time horizons. If you're beyond that, I would steer clear of some of these names.
Let's look at a name that has a little bit more of a positive fundamental bias. We could take a look at DuPont here. They have that attractive dividend yield. They have a consistent pattern of beating earnings estimates. And they also have the ag exposure here. And for those of you that have been paying attention to the morning call with Scott and I, one of our theses have been for Q3 and Q4, we really expect the ag names to light up and really outperform. And DuPont has that exposure to it.
Well, DuPont, again, one of those names where we saw some selling the last couple of days. Into a micro level of support down here around 45, 46. We saw a little bit of a tail up yesterday. Buyers trying to hold that area of support. You could see, a little bit of a short-term pop here. But again, with downtrends, you're going to see consistent lower highs. So keep an eye on what this does over the next 3 days. I really wouldn't be a buyer until it makes a higher high, where that trend that you're seeing right here starting to develop starts to maybe change a little bit.
All right, and let's wrap it up with Caterpillar. Probably see similar chart. Same fundamentals, same confirmation.
Caterpillar, unfortunately, in a downtrend, confirmed downtrend, you can see just lower highs and lower lows. Took out this area of significant support just a few days back. Now heading for the September lows down around 70 bucks. So I would steer clear of Caterpillar.
All right, let's move along to quick hits for some quick cash. Everyone's favorite name to trade, Apple, reporting on July 24th. For those of you that missed our webinar presentation last night, catch it across the streets. Websites, having a problem talking today. Reporting July 24th, we're looking at back to school for a longer dated trade, and also we're going to see some speculation in terms of new products coming out. Don't forget the iPad launches on July 20th, so what are we seeing going into some of these product speculation and earnings trades?
Apple's been a great trade. It's been a great trade for us on the virtual trading floor. It's been a great trade for many people across the board, whether you're institutional or you're mom and pop retail. Over the last 6-7 sessions, we saw a real lift in price. We saw the stock come out of a nice base. We have to pay attention to this level, 620. We've seen 620 fail a few times. Prior to earnings, the stock sold off pretty aggressively. You can see that sell-off, the bounce to 620, and then it reported earnings. It gapped up. I don't know if you remember, it had that big $50 gap up that one day, up to 620, and then we saw selling ensue. We rallied back to 620 again, and over the last 2 days, you've seen a pullback. Is this just a pullback that potentially launches us through? But 620 is that line in the sand right now for a lot of traders. So for those that are more active, it's a short against 620 so long as that acts as resistance. And when it does break through on good volume, which I suspect may be due to an earnings report or that catalyst type of event, then it's probably a better long, and we could see a trade through prior 52-week highs into maybe the 700, 750 mark. So right now it's into resistance. We have to respect that, and it's probably best left as a day trade or a short-term trade at these elevated levels.
Let's move along to a derivative of Apple has significant exposure to the tech behemoth TRIQ. We own that stock, and the stock's under 10 portfolio. It's a newer name for the T3 guys, trading about 5 million shares a day. So there is some nice momentum in here. How does that one look on the charts?
Not nearly as good as Apple. Again, the downtrend, you can just see the consistency here. Lower highs, lower highs, lower highs, lower highs. And that's the first thing I look at when I look at a chart, is it making higher highs or lower highs. So still in a downtrend. This to me is pretty ominous looking. Looks a little bit bear flaggish. It looks like it's trying to, maybe retest that 450 mark or potentially these lows again before maybe turning back up. So to me, until it gets above this pivot right here, this high, that's around $6, probably left to be on the sidelines.
Okay, all right, moving along to Amazon. I actually took a look at the Nexus 7 Google tablet, which is pretty cool, a little 7-inch tablet. But the question isn't with names like Amazon and the other tablet makers, are they going to see a lot of compression in terms of margin? Are they going to have to start discounting the fires and so forth? And is the stock price telling us that story yet?
Well, I think Amazon's an interesting trade. Right now it's best left as a day trade. Let's just, sort of look at this with a bird's eye view. The stock's trading around 220 right now. We go back to, early, mid-April, it was at 220. So the stock not making a lot of forward progress. That being said, it's not really breaking down either. So, we have a stock that's sort of building a base here. I suspect this is going to be a wait and see with earnings type of trade. For right now, it's just a cash flow, short-term, day trader type play. It did break out of this, little bit of this, channel that it's been in the last, month or so. We did break down yesterday with some decent volume, but again, that being said, until we really break out of this range, and I'm going to define this range as, prior highs around 235, and these lows down here around, 210, 205, it's just a range-bound type of trade. Like I said, best left for the shorter-term price.
I just think it's really interesting how so many of the individual names that we look at are, it just confirms that it's such a highly correlative market because they all look like the same charts. S&P, NASDAQ, and so forth. It's just that range-bound, sort of sloppy, unconstructive trading since May for the most part. Moving along to Goldman Sachs, the big brokers start reporting tomorrow with JP Morgan. Let's see how its peer is doing.
Well, with Goldman starting to base, which is good. The banks and some of these, financial names have not been a place of money inflow. You see outflow here. We do have a tradable level at $90 here. We can see it was tested once, tested again, which is positive and constructive, but really sort of, in the middle of the range right here, probably not a very actionable area. until it gets above 100 with some good volume, or potentially below 90 with some good volume, I don't really see a trade in here. So, but this is constructive and healthy. If the stock is going to turn up, it probably will come out of this basing type of pattern.
All right, and let's wrap it up with one of the exchanges, CME. There's been a ton of action in the futures with all the commodity plays that we've been seeing with corn, wheat, and so forth. So they've certainly seen an increase in volume. Is the stock price seeing anything here?
You know, CME, I used to trade this stock all the time.
Yeah, we've done stuff on options profits with it.
You know, if you look at a weekly chart here, and I've gone out in terms of time frame just to give you a better macro picture, there really hasn't been a whole lot of opportunity in these exchange names for a long time. This goes back to about 2009. So while we've rallied off of those market lows, if you think about what the market did off the off the 2008 lows, you know how far we've come back. This certainly doesn't have that luster to it. So this to me sort of looks like a little bit of a broken type of pattern. If we do take out these lows down here, which is right around 220, 230, the stock could set up for a much lower prices. So basing here, but not looking like it wants to break out of the base. Looks like it really wants to break down out of this base. So keep an eye on it for further downside, I would say.
All right, everybody, that's it for us today. Catch Evan at the end of the day. Options, profits, real money, and T3Live.com as he wraps up the charts.
Hello, everybody. My name is Pete Renzulli, Chief Marketing Officer of T3Live.com and one of the traders in the active mentor room for T3 Trading Group. What I'd like to do today is I'm really excited about introducing you to and inviting you to the first T3 Live Active Trader Summit in New York City, which is on Saturday, July 14th. We're going to have quite a few speakers today. There's going to be myself, Mike Lee, Evan Lazarus, Mark Sperling, Rob Smith, Rick Meadows. There's going to be a ton of great content, but the number one reason you want to come is you want to be able to network and associate with other like-minded people like myself. I'm going to pump you up. I'm going to guarantee you that. Other people like yourself who have a burning desire to learn how to be a trader. So I'm going to ask you to make a trade. Trade one Saturday for some of your time to come down and learn strategies, tactics, techniques, and put some faces to the people that you see in the virtual trading floor in T3 Live, and learn to take your trading bigger. Learn how to be a better trader than you are now. Learn the strategies. It's going to be a lot of fun. I can't stress that. I know it's a Saturday, but you know what? I want you to be there, to get excited, and to be here. Prove to yourself how bad you want it. Show up and come down and get excited with us. Saturday, July 14th. Now, very quickly for the registration. All you have to do is register at T3Live.com or be an existing member of T3Live.com, and you get 2 complimentary admission tickets for free. So all you have to do is go to T3Live.com and register. If you would like to join us at the post-event cocktail reception, you can also upgrade to either premium or VIP. That's up to you, but either way, please take advantage of the general admission, 2 free tickets. Bring a friend, bring a neighbor, bring a wife, bring a girlfriend, maybe bring both, but come down and expect to have a great time. Saturday, July 14th here in New York City.